Staying with company results, we're now joined by the Chief Executive of Coronation Fund Managers. That's Anton Pillay, and he's going to be walking us through their numbers. Anton, thank you for making the time to join us. Now, a quick look at the numbers. Something that sticks out for me is that your assets under management have grown by 8%, but we're seeing that there's been a dip in revenue of around 6%. Talk us through why there's that contradiction and how we should be understanding it.
Yeah, our assets under management increased by 8%. That's off the September 2014 year end. What we've been saying to the market is that in the past, the levels of performance fees that we've earned have been abnormal. In the current year, we think the performance fees have normalized. And they have, as a result, affected the earnings, resulting in the drop in the earnings. So our profits for the year at about 860 million rand. That's increased by 10%. Decreased by 10%.
So an abnormality in terms of the performance fees that have been realized up to date. We're seeing a change in that cycle. What does the future look like? Are you going to be coming under increased pressure, or are we expecting that swing to come through again?
So we've been cautioning the market for probably the last 3 or 4 years that that our business is cyclical, and the revenues that we generate is both linked to the alpha that we generate, either outperformance and the market returns. From a performance perspective, if you look at our long-term performance, we remain in the first quartile over significant periods of 5, 10 years and since inception, which in some cases, in some of our funds cases, is roughly about 21, 22 years. So since we started the company. Our highest view equity portfolio, for example, that's delivered alpha of 3% per annum since inception more than 21 years ago. So long-term performance very much remains intact.
So long-term performance is intact, but let's talk about the growth of Coronation. I mean, speaking to Jan van Niekerk just a bit earlier, he said it's important for a company like Coronation to grow gradually, and it's not about getting too big too fast or growing any bigger than it already is. Talk to us about your reaction to that statement, and also how do you compare amongst other industry players in terms of the pace of growth that we're seeing?
Okay. So we're not asset gatherers, and we don't target our share price. Our sole focus is the delivery of alpha to our clients. So what we did in 2012 was that we closed down, or soft close, part of our institutional business, so the multi-asset and the equity portfolios or strategies, to new clients. And this is basically to ensure that we continue to protect that alpha generation. Those products, or the retail part of the business, does still remain open, and we do still continue to attract funds on our fixed income side and institutional side. But from a control point of view, a size point of view, we do monitor that, and we do, as we did in 2012, and I think early on in 2003 or 4, we also closed funds when our alpha, when we thought it was starting to affect our alpha.
Anton, you've also spoken about your retail side of the business. Let's bring it into the equation now. Taking a look at your statement, you make mention there that there will be a review of the retail offer, and maybe even a review of the fee structure around the retail funds. What's the thinking around the retail funds right now?
So from every few years, so the last time we did this was 2009, 2010, we review the retail products, and that's just taking into account market conditions, clients, etc. And we are in the process of reviewing our retail products as we speak. This will hopefully result in both a simplification and a reduction of fees in certain of the retail products.
So there will certainly a reduction in fees in some elements, and also simplification. Correct. Let's go back to the overriding push and pull between the developed and the emerging markets. And it seems, taking a look at your numbers again, that developed markets are continuing again to outperform emerging markets. What does the future look like? Do you expect this gap to continue into the future, especially if we take into consideration global monetary policy trends coming to the fore?
Yeah, it's very difficult to predict the future, as you know. So, but what we do think is that a lot of what will happen in terms of the impact on both asset flows and asset valuations will occur once the Fed starts to increase its rates. I mean, you have seen that developed markets have outperformed equity markets. over the last few months, mainly as a result of a depreciation of developing or emerging market currencies.
And just as a final question, as we wrap up on the interview, just give us a sense of the kind of targets that you and your team are looking at as you head into another set of results. What are you working towards?
So the only thing we target in the business, as I say, we don't target, we're not asset gatherers, so we don't target a certain level of assets under management, we don't target our share price. The only target that we have is a generation of alpha, or the outperformance of the market in terms of our mandate.
A very big thank you to Anton Pillay, reluctant to give me insights into the future. He's not touching that crystal ball. He is the Chief Executive of Coronation Fund Managers.